Let me see. Okay, yeah, we can start. Hi everyone, welcome to this live coverage. Nice to see you back, guys. I'm all by myself today. I'm alone. Maurice is on vacations. Joha is also on vacations. So I will be here with you to share the live event, the first release of the US GDP, right? We have uh, uh, US GDP being released monthly basis, but the figures that we get are quarterly ones. And today we have the advanced GDP figures. I hope you're seeing the calendar for the first quarter of 2016. We will have a revision of this number next week and the final reading by the end of the second quarter. Anyway, the market is pretty dollar bearish today, but mostly because the Fed, uh, honestly, the Fed was middle dovish, middle hawkish. In fact, the Fed was a big disappointment because they actually did not offer nothing to the market to work with. But what actually put the greenback under real selling pressure was the Bank of Japan, which decided to leave rates unchanged overnight, right? And we have a 200 pips plummeting rally in the dollar Japanese yen. Let me share my charts so we can take a look at what we could expect from major pairs during the upcoming hours. Anyway, as I was saying, the market is mostly dollar bearish. So, but we don't have a strength, right? I do see the market is lacking volume, lacking conviction right now, exception, of course, of the dollar Japanese yen. But take a look at the chart. It plummeted 200 pips, and there we are consolidating at 20 to 30 pips range with little going on in there ahead of the GDP readings. Uh, this is the one that affects the market the most, the advanced release. And indeed, the US needs to show some actual growth to be able for the Fed to be able to rise rates, right? And that's something we are not saying. In fact, ever since the last quarter of 2015, the economy has been slightly contracting, not in contraction territory, not actually contracting, but growth has slowed down. We have the risk coming from China during the second half of last year, and it seems that extended over the first quarter, right? But things are starting to pick up right now. We are getting better data from China, good numbers in Australia. Uh, Inflation in the Eurozone was flat, but at least out of negative territory. And US employment remains strong. So, generally speaking, the world is doing a little better, just a little, right? But that's in the second quarter, that's in April, right? And the figures we are getting right now are for the first quarter. So, I'm actually expecting something a bit disappointing for today. Let's see what the market actually offers. In the meantime, we can take a look at the euro dollar. I was watching the in the daily chart, right? This small candle is the Sunday candle, right? The little movement when you have Sunday night. But anyway, it has been rising ever since the week started, but we are barely 130 pips away from the weekly low around 12.15. Sorry. So actually, there's not much going on in here, and this recovery, right, we have so far this week has been pretty shallow because the pair continues to trade below the 1380, 1390 region, a level that I do believe is the immediate resistance level. And the one to beat today, in a really disappointing figure, right? To see the pair actually gaining some upward momentum and maybe extending towards the 1416 price zone, right? That's for me the probable bullish target for today if we have a really, really bad number in the GDP data. Back to the weekly chart. I know I have said this plenty of time, but take a look at this chart and how many times ever since January 2015 the price have stalled around that 1416 region, right? Ever since January 2015, a year, almost a year and a half, that the price has been unable to break above it. We have just a 1 day spike above it. It was in August last year when we have that Black Monday in China, Chinese stocks, and it was not really a long-lasting spike. In fact, if you take a look at the daily chart, you will see that it was quickly reversed in like 24, 48 hours. That's the most. So actually, what we are seeing in the euro is a slightly positive tone, but to talk about a steadier continuation in the pair towards the upside, we really need to take this level out, and maybe close the width closer to 115, in which case I do expect the pair to continue rallying up to this level, that spike around 1710, right? But anyway, and for the short term, as I was saying, 1380 90 is immediate resistance up to then that 1460, and I honestly can't see the pair breaking above this level today. I do expect some selling interest to surge around here if we reach that level, but well, let's see what happens. You know how the market reacts to this. And for the supports today, in the case that we have all of a marvelous positive surprise coming from the GDP in the US, we have an immediate support around 1310, 1320. We have plenty of highs and lows in there, and it's almost and also, sorry, the 23.6% retracement of the latest bullish run in the pair, right? Measured from 108.40 sorry, up to the 1464 we closed a couple of weeks ago. And this is the Draghi bazooka, right? We heard from early March, so this is starting then. We have this Fibonacci rally. In fact, the last week the price bottom, and this week bounced it from the 38.2% retracement of that rally. So that's what I'm saying, that the immediate support comes around here, 1310, 1320, which is the 23.6% retracement of that rally, right? We have below that level, and the next short-term support around 1270, right? Take a look at this for our charts and how many times the price fell around that level. And I do believe that below this level, we can. I don't see the market having the strength to do that today, but the pair can go down to 1220 to end the week near this level. Okay, that's goes for the euro dollar. And for the pound dollar, the fact is that it has been a pretty nice nut rally for the past 2 weeks, not just one, right? It has been recovering and recovering, and I was thinking that a couple of weeks ago we have the pair struggling to regain 43. One we did, we have some trouble advancing beyond 44, right? A couple of days trying and failing, and all of a sudden we are now struggling to overcome 46, which is the next level to take, right? The next level. Anyway, most of this recent pound strength is coming from some anti-Brexit rhetoric coming from authorities, not only in UK, but also outside UK. We had, in fact, President Barack Obama discussing the risk of Brexit. This not this past weekend, I do believe it was the previous one. But anyway, honestly, and despite the market is not talking much about it, the fact is that these days we have still higher chances of a Brexit. It's Greece the problem again, than of a Brexit, right? The United Kingdom living in the Eurozone, it won't be as huge as the Greece living in the Eurozone. And the fact is that over these past few days, Greece has been discussing with the FMI, it has been printing really negative macroeconomic data, and it's in trouble again, but the market is not talking about it. So it's like it's not affecting the market, but keep an eye on that, guys. Keep an eye on news coming from Greece, because at any moment we will see it coming back to disturb any kind of rally we may have in the euro, right? And if there is a chance of country leaving the eurozone today, I believe it's higher the chance that Greece will leave than the Great Britain, and there's a big difference between both. It's like that Greece is part of the 17 main members of the union, right? The Great Britain is like a friend with benefits, guys. It's part of the union, but it's not part of the union. So And anyway, taking a look at the technical levels to watch today, the Paris assets was saying having some trouble to establish above the 46 level. It seems we can't open a candle above it, and some sellers are daring to jump into the cross once we aim to go beyond it. So I would like to see a break above 46.40, right, the weekly high, to confirm further gains. In which case, I do expect the pair to go quickly up to 47 and from there to 47.70, which is a long-term strong static resistance area. And what I'm also watching in this 4-hour chart is that the 20 simple moving average seems to be attracting buying interest, providing a strong support. 45.40, we are there right now. We have the last two candles bottoming around it. So if somehow the dollar gets stronger and we break below that level, the pair can correct lower, right? I do believe 44.80.90 will be the next probable target, right? And below that, not much in the way until 44.20. I still don't see that much strength in the greenback. I'm giving you the levels just so you know, okay? But now that I do believe that we are going to see a strong comeback in the dollar. What to say about the dollar, Japanese yen? I do believe the market is way overreacting to whatever the Bank of Japan does and does not. I don't see how the Japanese yen can be this strong, but this is what we're getting in the market, right? So we can battle against that. I was taking a look at the daily chart, and it taken one candle to erase almost 3 week gains. And despite we already have a huge movement today, the pair can go even lower, right? If we break below 108, the first logical target is the low we set early April around 107.60, sorry. And if we somehow break below this one in the short term, we can go down to 107. But I do believe that the main bearish target is 106.20. So we can go down there on maybe tomorrow on Friday if the dollar enters in another stealth spiral, okay? And to the upside, we have this 108.45, sorry, 108.45 as the immediate resistance. 108.80 comes then, and I would say 109.20 as the most the pair can recover on a positive GDP rating in the US. Another thing that I do believe it's interesting to take a look at, give me a second, I will arrange a bit my charts so we can see the reaction, is the Aussie, right? Because the Aussie has been rallying ever since the year started. In fact, this is a yearly rally since early January to this April highs, right? And we have that huge decline, right, on Tuesday, right, when Australia released quite negative quite negative inflation figures for the first quarter of this year, right? And really disappointing data. Not that inflation was negative, but well below previous and well below expectations. Uh, what can I say? I still believe that the OC has room to go up to 80. You know, charts are telling me that the corrective movement may have been complete. I'm looking at the 4-hour charts. The price has managed to recover above the 200 exponential moving average and above that FIBO. We have the corrective movement, and that now we are trying to recover. Of course, I would like to see some upward momentum coming in here and the pair breaking this highs. Take a look. We have almost 3 highs in this region. 76.60 is then the level to beat to go further higher. Okay, we are less than a minute to go for the news, and we have a bit of delay in the room, so you will probably see the reaction first and heard me comment about it later. So I will shut up and wait for the numbers to be out, and I could keep sharing with you what happens after the release. That's 1 minute for me. almost there. And we can talk about how commodities are doing and how they're affecting commodity currencies. But after the release. Okay, news should be out. Let me see. Not seeing much in the market. Okay. Initial shoulder claims rose to 257,000 from previous 247 and against 252 expected. But the market is not reacting much. It's just unemployment. We are not seeing nothing about. Okay, zero point 0.5 GDP, zero point 0.5 below expected. Not too good for the greenback. And from previous 1.4, pretty much in line with what market was expecting. Let me check calendars. Okay, price. Okay, let me share the calendar and see what's going on. Core personal consumption expenditures were also out. But I can see the numbers. Sorry, guys. I am in a bit of a delay on my calendar. Not sure why. Okay, a big drop in business spending. Okay, big drop driving mining prices going lower. Nothing really shockingly news. In general, typical data for the US, poor unemployment claims, poor GDP, but not that much. It seems the market has priced in most of it. Limited reaction in the market, quite disappointing if you ask me. I was expecting a bit more action of this headline GDP. Seems the market is not actually willing to trade today after the three central banks we have yesterday, right? I forgot to check what the Reserve Bank of New Zealand did. I know they left rates unchanged, but I'm not sure if they were dovish or hawkish or what. I guess they were a bit disappointed also because they have mostly to recover ground. But I forgot to take a look at the statement. Okay, core price consumer. Okay, it was not that bad. Personal consumption expenditures, core reading, rise its biggest since the first quarter of 2012. The number is pretty relevant because the Fed uses to that inflation data to take their economic policy decisions when it comes to inflation. Still, come alongside with a negative GDP and weak unemployment claims, weekly, yeah. Since the market is not sure where to go. Anyway, I was taking a look at commodities right before the event. I was about to comment that both oil and gold are pretty strong today. In fact, oil is rising to fresh year highs, mostly because ES production has been widely reduced over the past week, and despite stockpiles have increased according to the latest Energy Information Administration report. The fact is that finally a reduction in production is telling us that the glut may come maybe closer to an end, right? But and with the Chinese economy picking up, right? Sorry, I have to take a breath and start over. It means that maybe we have We are going to see more consumption of energy over the upcoming months, and therefore crude prices could go even higher. I'm still not seeing much of an upward potential in their speculative one unless we take 49.20, because we reached 45, and I do believe that that's the sort of psychological level that the one the market was targeting, right? So now we can bring higher if the news continue to be positive for oil up to 49, 50. But if we take that last psychological level, then it will be speculative buying the one deriving the prices in oil and not just macroeconomic or fundamental data. And for oil, for gold, sorry, I believe that the commodity is today finding some support in the Fed's inaction, right? And the fact that the Fed will unlikely move rates in their coming June meeting. But still, it's trading range bound. It's lacking clear definitions. Uh, and we will need to take that 1283 high, right, before talking about speculative interest jumping into the commodity. In the meantime, I believe that it will find support more in dollar's weakness than in demand of safe haven assets. So if the dollar remains under pressure, this commodity will likely continue rising. Okay, pretty disappointing reaction in the market to GDP and inflation data. Market was already expecting a weak number. This was even weaker, but still we are there. No much to add. The euro did not move a pip. Our definition is slightly higher, but maybe 20 pips. Really, really mute market reaction so far today. Okay, not sure if the market is going to react much afterwards. I do believe that we are going to see a bit more of reactions in maybe around an hour or so when Wall Street opens. But so far, quite nothing going on in the market. Okay, we have no much more data ahead. I do believe next week will be a bit more interesting because we will have a lot of early month readings, including the manufacturing services PMIs from all Europe and the US and UK, some coming from China, and of course we will have US payrolls on Friday, right? But since we are not, that's next week. Okay, Friday will also be interesting, but not that much. Market is markets are tired. I'm tired. You guys, I miss Dale. I miss your hi. I really miss the guys. I don't like to be here alone. I don't like the silence. And talk to myself and to my screen. Okay, alright. Euro is retreating from the high. Really poor performance of the euro today. Maybe it's telling us that the willing interest is decreasing somehow. We are too far away from there. If we draw it a year, okay, no, not a line, not a neat line we can get in there. Still, we have this bullish movement with me consider. Remember, the immediate support in here comes at 13.15. Not actually much to do unless we take that level. Stocks have hardly react either to the GDP release. United States core personal consumption expenditures above expectations. printing 1.9 against 1.7 expected. The previous was 2.1, so it was positive. Okay, no, the actual is 2.1. 1.9 was the consensus, 1.3 was the expected in the core figures, sorry. Oh, well, the advanced GDP release used to be so much interesting than this one. Okay, well, I guess I'm going to wrap this up, guys. Uh, as a final comment, I said that the readings was even poorer than expected, but in line with what the market was expecting, that the first quarter was really soft in the US and there was not enough growth. The numbers can be revisited, right, in the upcoming 2 months. Unemployment claims ticked higher, but for by 10,000 and remain near record lows not seen in over 30 years. So, despite taking higher last week, are not that bad. And inflation, it's looking a bit more constructive in the US, but it's not such a great news considering that the Fed yesterday was far from presenting a hawkish stance. Overall, there's still no room for dollar rally, guys. I don't see the dollar recovering its ground, which means that the rest of the currencies will find some demand, yeah, of course, in uh, different weights. I mean, some are stronger than the others. So far, the pound and the yen look for me to me is much stronger than the euro on the OC. CAD also looks strong. It has more chances to go, particularly supported by oil. So I believe that's it for today, guys. Not much to add. Sorry, the market didn't help us to be a bit more entertained today. Thank you for being here and see you back soon, okay? Bye bye.